Hey everybody, it's me, Gregory Mannarino. How are you today? It is Thursday, August 24th, 2017. Alright, here we go. If any of you needed more proof that there is a lot of trouble just under the surface here with regard to housing, well, we got it today. Existing home sales missed the mark by a mile. And this is tremendous. This is now 2 consecutive months of existing home sales falling off of a cliff. Yesterday we heard about new home sales falling off of a cliff. I mean, also missing it by a huge margin. So again, there are many people that are gonna sit here and ignore this kind of stuff. They don't want to hear about it. They think that it's all nonsense. It's the same exact scenario exactly that we had last time. Everyone was saying, no, everything is fine. Even the Federal Reserve Chairperson Ben Bernanke said the same thing. But why did he say that? You know, there's a lot going on here. He specifically was waiting for the big banks to cover a lot of what they were doing at that point. Look, this has all come out. It's public knowledge. I'm not going to go over it here. But again, no one gets held responsible. Just like this time, more evidence, if you needed any, that there is a monumental, and I can't stress this enough, issue developing with regard to a housing bubble that I've been screaming about now for, I don't know, a year or 2 years. Yet another billionaire money manager, Jeffrey Gundlach, most of you know who this guy is, yesterday came out sounding a lot like Alan Greenspan, talking about a debt market bubble, and sounding a lot like this guy too. It's kind of interesting. You know, I've been warning about this probably before most other people, if not anybody else. For the better part of a decade, I've been talking about problems here in the bond market. Now, Jeffrey Gundlach, he's actually putting his money where his mouth is. He said specifically that bond market bulls have the potential to get walloped as rates rise rapidly. Now let's put a perspective on this. If you're new here, you don't know how things work. What would happen, hypothetically, if Alan Greenspan and Jeffrey Gundlach and this guy here is right, that at one point, who knows when, tomorrow, next week, next year, whenever it comes, we're going to experience a rapid sell-off here in the bond market? Well, rates would rise rapidly. Now, what would that mean? Think about it logically. If interest rates were to rise rapidly, how would that affect housing? Pretty simple to deduct that, isn't it? You would get a lot of pressure on housing. There would be a sell-off. How would it affect the stock market? Same thing. In the same way that these artificially suppressed rates here have caused malinvestment, distortions across the market to develop. We've seen the stock market inflate here. It's in a bubble on the back of the debt bubble. It would have an opposite effect. Although you're going to hear the mainstream financial pundits tell you that this scenario just outlined for you is wrong. Well, you know, they always get it wrong too, and they have something to sell you here. So I think we really need to start paying attention, people, to what's going on here. The debt is in a bubble. Don't listen to Greg Mannarino anymore. Start listening to people like Alan Greenspan. Start listening to people like Jeffrey Gundlach. It's just so important to understand what this means moving forward for you, for your investments, for your 401ks. I mean, look, I've gone over the fact here that this is all going to correct to fair value at one point. And housing, the debt market, the stock market, inverse bubbles here, they're all going to correct at one point, and it's going to be devastating to some, while others are going to benefit. Let's talk about that just real quick, going back to Jeffrey Gundlach. Last month, this guy, Jeffrey Gundlach, made it public that he's betting against the S&P 500. He's buying puts against the S&P 500, expecting the market to sell off. He's also expecting volatility to go up rapidly. He's also expecting a sell-off here, obviously, in the bond market. If he's correct, it'll be like another big short. He'll scoop up because he's got the money to do it. Everyone else's funds here that are getting bled off. So don't go crying when you're losing all your money, and these rich guys here are getting rich off of you, because you're being warned. You've been warned over and over and over and over again that this is going to happen. So let me just say this as plainly as I can. If and when, and it's going to happen, and there's no doubt about it, this corrects to fair value, and your house value falls off of a cliff and your retirement plans melt down, I don't want to hear a word out of anybody. And I think those of you here who follow this blog really should, make it your business to say, look, you were warned by a lot of people that this was going to happen and you chose not to listen. This is the same story, people, that repeats itself over and over and over again. It's just an incredible situation here. All right. With that said, I'm going to let you all go. I hope this has been informative for you. Again, yet another guy, a big hitter out here, is warning about the bond market. And think of how this is going to affect real estate and your investments. Home sales, again, falling. Existing home sales today and new home sales yesterday. Something's going on here, and we need to pay attention to it, because the mainstream is not going to talk about it. All they're going to do is cheerlead. That's their job, to keep people hyped up, to keep people in this market, to keep people watching those shows, and that's it. And I think they're absolutely a part of the problem, honestly, because they can't tell the truth. They never will tell the truth. They can't talk about how the markets are distorted. These people, for the most part, they are prostituting themselves, and they're going to cause a lot of people to get hurt. All right, with that said, I'll let y'all go. Over now.